financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to be here with you and have you along for the ride. You can find us online at followthemoney.com. Right there, you'll find all kinds of resources that we've made available for the public, but also for our members. Become a member at Follow the Money, and you find out that the Follow the Money website is like an iceberg. What you see on top is nothing compared to what's behind the login area. So become a member and check it out if you haven't ever done that. Now, followthemoney.com, as I had mentioned, is where you can find all of these resources. And one of the videos that we made, and this is actually free, all you have to do is just sign up for our email list, or if you're already a member, you can find it, and that is the 12 lessons from the world's greatest stock traders. What a really cool video we put together. And actually, I delivered this message for the very first time at our 2018 Follow the Money Summit. That was so cool. We had so many different people coming together talking about, trading, talking about cryptocurrencies, talking about gold and silver, talking about online marketing. I mean, there was so much going on there, just a lot of fun. And then we did one in 2019. We had a summit there as well. We talked about China and the rise of China and cryptocurrencies and, of course, gold and silver and trading. We had a really good time. Now, this year we weren't able to do that, of course, because of all the stuff that's going on. So there is no live summit this year, but we hope to do it in 2021. So be keeping your eyes out for that. We'll be trying to do that. We'll see. We'll see what happens with this whole public health crisis. Hopefully by 2021, everything will be somewhat back to normal. Maybe it won't. According to Google, we just saw a recent news story from Google that they're keeping all of their remote workers at home until, I think, the summer or maybe the spring or summer of 2021. So that kind of gives us a glimpse of what the big companies are thinking. But today, on today's podcast, I want to take this 12 lessons from the world's greatest stock traders and just kind of condense it a little bit, because I want to share on this podcast just 5 of those lessons. And I think the lessons that I want to share today will really help you if you're a new trader, or if you're someone who has struggled with trading before in the past, or maybe you're an investor, but you just want to time your entries and exits a little better. That's really what this podcast will be all about. And when I look back at the greatest traders of our generation and even prior to us back in the 20th century, the earliest 20th century, I think of guys like Jesse Livermore. Jesse Livermore came up in the early 20th century, and he made his living in the bucket shops of that time. You may not be familiar with what those are, but those were really interesting trading outfits that operated before there was an SEC and all of the different regulations that we have today. But Jesse Livermore was a young kid, and he left home very early, kind of really gravitated towards the markets, has a really interesting story, and his book, which, he's actually written a few different things, but one book that's worth a read is entitled Reminiscences of a Stock Operator. It's by a pen name, Edwin Lefevre, and this book really explains the young Jesse Livermore's approach to trading and how he kind of cut his teeth. Lots of interesting stuff in there. And then there's another trader named Nicolas Darvas. If you've never read Nicolas Darvas's book, How I Made $2 Million in the Stock Market, I just can't recommend the book enough. I remember whenever I first saw this book title, I thought, oh, that sounds so gimmicky. I'm sure it's a fraud. I'm sure it's a scam, And then, of course, I opened it up and read it. I said, this is brilliant. It's a really brilliant book. It's really quite stunning. Nicolas Darvas was a Hungarian-born dancer. He was trained in economics. He was born in 1920. He was introduced to stocks in 1952. He got some shares of Brylan gold mining shares. It's a really interesting story. He was going to be dancing. Him and his dance partner Julia were going to be dancing for this company, and then of course they something didn't work out, and they were going to pay Nicholas with gold mining shares. That was the actual payment, and he ended up dancing, but he felt bad, so he went and bought the shares anyway. And that, of course, began with just a very small amount. And before he knew it, he just kind of tucked it away. And then he came back a few months later and saw that the value of those mining shares had just really gone up, and it attracted, him. So he began investing with less than $10,000. And in about a decade, he had amassed a $2 million fortune from the stock market. When you read his book, How I Made $2 Million in the Stock Market, he kind of documents his path to success. He began, like every trader does, looking for tips and rumors. He subscribed to investment newsletters. He took advice from brokers. He read stock market books. He read annual reports and tried to figure out the fundamentals. He traded penny stocks, over-the-counter stocks. He tried, insider trading tips. He, in-depth research, and then finally stumbled on to the thing that every other great trader realizes, and that is there is no guru who's going to give you the answers. If you don't do your own research, you'll ultimately fail. And he realized that the most important thing for trading was price and volume. Wow. Just so simple, so basic. Technical price action was what really made the difference in Darvas's trading career. And so he developed this thing known as the Darvas box theory. And the Darvas box theory is a momentum strategy, basically an area of consolidation that develops upon the chart. And like a set of pyramids, the boxes kind of pile on top of each other, and the opportunity to buy occurs when the stock penetrates the uppermost part of the topmost box. And then he would sell when the stock began to break down. So it almost looks like a sideways consolidation and then a breakout. Well, he got really successful with that. And he, of course, had many, many lessons to share. We also think of guys like Bernard Baruch. Bernard Baruch was born back in 1870. He was a really well-known statesman in the first part of the 20th century. He coined the phrase the Cold War. He served as an advisor to 7 U.S. presidents and the United Nations, and he earned his first million by 25 and purchased a New York Stock Exchange seat for $18,000. He was a successful stockbroker, but he lost a lot of money in the first 6 years of his trading career because he didn't do his own research. Again, like normal, he tried to find someone who would just give him all the answers. And while it's good to have mentors, and it's good to have coaches, and it's good to have systems that other people have created, it's also very important for you, if you want to be a successful long-term trader or an investor, that you actually learn how to do your own research, right? That's important. You need somebody to help you or teach you how to do that if you don't know. And a lot of that kind of begins by reading books by many of these great traders. Now, he had a lack of knowledge and experience, and he really relied more upon people's opinions than he did trends. And his trading luck, quote unquote, began to change when he began to understand trends, like so many of us over time. We also think of guys like Gerald Loeb, who wrote a book called The Battle for Investment Survival, a fantastic book. I recommend it to every trader. It's not too hard to find. They've kind of republished it, but for a while it was out of print. And this is a book that really, really is good for those who really think the stock market is rigged, right? Because Loeb agreed. He said this whole thing is rigged, and if you're going to go into the world of the stock market, you better put your battle gear on because it's a real battle. It's a real war. Really great book. And filled with great information. He was a founding partner, by the way. Gerald Loeb was a founding partner of E.F. Hutton. You've probably heard of that, a renowned Wall Street trading firm. And he had the biggest influence upon the final guy I'll bring up before we talk about some of these lessons, and that's William J. O'Neill. Now, William J. O'Neill is someone I've learned a lot from as well. He is the founder of Investors Business Daily, one of the greatest traders of our generation, and made a lot of money with growth stocks, started trading whenever he was in college, started taking his money and putting it in growth stocks, and really, was attracted by the stock market for what it could do for his, personal finances. And so William J. O'Neill is someone we certainly think of. He has a great book called How to Make Money in Stocks, and you can pick that book up as well. We encourage you to have a bookshelf for those of you interested in trading and investing. Get yourself a library, start putting it together, and read these books. Learn about some of the different traders who've lived in the past. Learn from success, right? Learn from success. Let's just give a few of the lessons. As I mentioned in today's podcast, let's mention 5 lessons from the greatest traders. How about the very first lesson? They all noticed that stocks move according to cycles or patterns. Every single last one of these traders all recognized that the market moves in cycles, that it moves in patterns. This brings to our memory or our recollection of the book of Ecclesiastes, where King Solomon of Israel, in Ecclesiastes 1 verse 9 says, "What has been done is what will be, and what has been done is what will be done. There is nothing new under the sun," right? And this is a truth. And many of these traders quickly realized just how powerful this concept is. Consider these quotes. Gerald Loeb said, "Stocks act like human beings and go through the same stages and phases as people. This means that there is infancy, growth, maturity, and decline in stocks, just like there are in people." That's a great observation made by Gerald Loeb. Or how about Nicolas Darvas, whenever he said, "Like human beings, stocks behave differently. Some are calm and slow and conservative. Others are jumpy, nervous, and tense. Some of them I found easy to predict," Darvas writes. "They were consistent in their moves, logical in their behavior. They were like dependable friends," he writes. And then you also have guys like Jesse Livermore, who said, quote, "All through time, people have basically acted and reacted the same way in the market as a result of greed, fear, ignorance, and hope. And that is why the numerical formations and patterns recur in the market on a constant basis." So they all recognized that the market moved in cycles or patterns. And, one of the easiest ways for you to really develop this skill is to print out charts of stocks that you like to trade, or ETFs, or commodities, or currencies, or cryptocurrencies. Many of you trade crypto. All of this stuff applies. It's all the same, because ultimately the market is just a manifestation of many different people's ideas all coming together. And so it doesn't matter if it's a cryptocurrency market or a traditional currency market or a commodity market or a futures market or whatever it is, stock market, ETF market, whatever you're trading, there are going to be cycles. There are going to be patterns. And this is something you can certainly learn the hard way, or you can consult the success of the past and find this to be a very, very true statement. Well, let's talk about another lesson from the greatest traders. Another lesson is that they all understood the importance of knowing general market conditions. General market conditions. This is what I tell all of our students here at Follow the Money, and that's why we provide our market tracker service for free, which keeps track of the S&P 500 on a regular basis every single Friday, or every single weekend, I should say. We take the pulse of the S&P 500 and figure out what are the major trends right now. Have they changed, over the past week? Because if the trend changes, you want to know that. If the wind is suddenly blowing in your face as opposed to your back, you need to know that, right? Especially if you're going to be a trend trader. You're going to be trading trends. And so the importance of knowing where the market is and understanding and knowing what the general market conditions are is extremely important. One of the most important reasons why we track the S&P 500 is because of a study that was initially done by William J. O'Neill, but that has been confirmed by many other outfits and research firms over time, is the fact that 4 out of 5 U.S. stocks listed on the S&P 500, actually 4 out of 5 stocks in general in the United States, will move in the direction of the S&P 500. So if the S&P 500 is in a long-term downtrend and you're trying to be a bull, you're going to find that the majority of stocks are not going to work for you, right? Likewise, if you're in a raging bull market and you're trying to be a bear, right, you're going to find out that it's going to be difficult. You're kind of running against the tide. You're running against the grain. Nicolas Darvas said this as advice in his book: first, check whether the market as a whole is rising or falling. In other words, are you in a bull market or a bear market? If the latter, stay out because the odds are against you, right? Here's Jesse Livermore saying there is only one side of the market, and it is not the bull side or the bear side, but the right side, right? So you've got to stay on the right side of the market. Also, Darvas makes this comment: all a company report and balance sheet can tell you is the past and the present. They cannot tell you the future. So many people who rely strictly upon fundamentals, and there's nothing wrong with that. I mean, we teach how to understand fundamental analysis here at Follow the Money. Although we are kind of technical fundamental traders, we combine them together. We don't view fundamental analysis as the end-all, be-all, or technical analysis for that matter. We believe that bringing them together and marrying them can actually give you better returns over time. But the point really being here is that if you look at an earnings statement or a balance sheet or a company financial statement or whatever, you're looking at the past, right? You're looking at the past, and when you look at a chart, you're also looking at the past, but it's newer. Like you can see it in real time. So things are happening in real time that you can see. So you're seeing the past plus real time. Whereas with fundamental analysis, you're simply looking at the past, a picture of what happened 3 months ago. So I mean, that's good. It's helpful to know that, and we want to know that. But if you rely upon that only and you don't use any kind of technical analysis, then I would say that you could probably improve your performance by understanding both of them. Okay, let's consider another lesson that we can learn from the greatest traders, and that is that they all learned to ignore market opinions and stock tips. So lesson number 3 here, they all learn to ignore market opinions and stock tips. In fact, Jesse Livermore was so strict about this particular rule, this particular lesson that he had learned, that he did not allow any of his office staff to speak to him during the day. He literally would sit in his office and read the ticker tape. Back then they had a ticker tape created by Thomas Edison, and it was connected to the telegraph lines, and it would provide ongoing price data, price and volume data. And so instead of sitting in front of a laptop or in front of his smartphone, Livermore didn't have those things, so he had a ticker tape, and he would watch that ticker tape. He would read the tape, is how they would say it, and he wanted no interruptions, specifically interruptions of news, because he was very, very certain that he would be able to see the news in the tape, right? He could find it. Bernard Baruch once said, if you want to know the news, look at the chart, right? Show me the chart and I'll tell you the news. It's something like that. Very, very clear that these men understood that you could see what was really driving things by looking at the price and volume action, that it would show up there. Jesse Livermore said this. He said, "A man must believe in himself and his judgment if he expects to make a living at this game. That's why I don't believe in tips," right? Jesse Livermore learned that you could get burned by taking people's tips, right? And then Gerald Loeb put it this way. He said, "The market is better at predicting the news than the news is at predicting the market." Well, there you go. Who disagrees with that, right? The news is very poor at predicting what the market is going to do. The news can be helpful to you, but for many people, it actually ends up hurting them. So very, very important lesson here. Lesson number 3, they all learn to ignore market opinions and stock tips. Let me give you another lesson. Lesson number 4. This one is very, very key, and that is they all learned to cut their losses quickly. A survey of these great traders, you'll discover they had no patience for losses. They would cut them. They didn't want to sit, and in fact, the few times they did have big losses, they would live to regret them, and they constantly said, do not do this. Cut your losses quickly. Even the very best hitters in baseball only succeed like 30% of the time. A trader only has to be correct less than 50% of the time as long as he cuts his losses short. Here's William J. O'Neill. Here's his quote. He says, "The whole secret to winning big in the stock market," you ready? What's the whole secret? He says, "is not to be right all the time, but to lose the least amount possible when you're wrong." I seriously believe that if you would just take that sentence and literally, if you're a trader and you trade regularly, if you would take that sentence and just type it out or write it down and put it next to your computer. Let's say it again. The whole secret to winning big in the stock market is not to be right all the time, but to lose the least amount possible when you're wrong. Isn't that powerful? Isn't that powerful? Yeah, how about this? Bernard Baruch says, if a speculator is correct half of the time, he is hitting a good average. Even being right 3 out of 4 times out of 10 should yield a person a fortune if he has the sense to cut his losses quickly. That's the key that so many people fail to realize. Let me give you one more from William J. O'Neill. I think another really good quote here. He says, my philosophy is that all stocks are bad. Right? That's very similar, by the way, to Gerald Loeb. He probably picked that up from Gerald Loeb, who was very, very defensive towards the stock market. But he said, my philosophy is that all stocks are bad. There are no good stocks unless they go up in price. How about that? If they go down instead, you have to cut your losses fast. Letting losses run is the most serious mistake made by most investors. So very, very clear here that if we'll cut our losses and not sit on them as a trader, you're actually going to be doing yourself a really, really, really big favor. Let me give you one more lesson that we can learn from the greatest traders of yesteryear, and that is that they all avoided downtrends. They all avoided downtrends, except to short stock. Jesse Livermore, for example, made a fortune in the 1929 crash because he rightly saw the market was topping, and then he piled in short and rode that puppy down and made a lot of money. In fact, he made so much money that guys like J.P. Morgan, who were the rulers of Wall Street back in these days, were literally calling Jesse Livermore and telling him, stop shorting because you're literally, doing damage here. I mean, he was making that much money from the downtrend in 1929 and 1930. And so, avoiding downtrends is key. If you read Nicolas Darvas's book about how he made money in the market, listen to what he says. He says, quote, I also learned to stay out of bear markets unless my individual stocks that I was trading remained in their boxes or were rising. In other words, his Darvas boxes, as long as they were staying there, they weren't falling. As long as they were continuing to rise, he would stay in them. But the minute that they broke down, he would get out. And he learned to stay out of bear markets. Jesse Livermore says this, play the market only when all factors are in your favor. No person can play the market all the time and win. There are times when you should be completely out of the market for emotional as well as economic reasons. That's one of the more powerful lessons we can also take away here, is that traders shouldn't trade every single day just to trade, right? So many traders overtrade, and you don't have to do that. You can sit back and wait for the good, opportunities to come to you. And that's what these great traders did, right? They weren't trigger happy. They weren't ready to buy every single thing that they saw just because. They waited for the right setups. Boy, there's a whole lot you can learn from these traders of the past. And if you want the entire video lecture that I did on this topic, the 12 greatest lessons, or the 12 lessons from the world's greatest stock traders, all you have to do, if you're a member, just log into your dashboard and you'll find the link in your dashboard. And if you are not currently a member and you just want that free video, just go to followthemoney.com/email and join our free email list. And as a free gift, we'll send you that video along with some other free gifts as well to kind of help you get started on your journey to trading success. Hey friends, this is Jerry Robinson here from Follow the Money Radio, and recently we have been receiving a lot of great feedback about our weekend ETF trend alert service. Perfect service if you are a swing trader or a position trader who likes to know when new uptrends are starting. We send out every weekend the latest ETF uptrend alerts by email for all of our members. Let me just give you some of the latest ones we have sent out that you, if not a member, you have missed. So back on May 8th of 2020, our members received an uptrend alert on solar energy, ticker symbol TAN. Since that alert was sent, TAN has risen by nearly 40%. We also called a new uptrend alert in silver. Many people know silver's on the run. We called that uptrend back on May 15th of 2020. We detected a new uptrend was forming, and since that time, silver has risen 45%. We called a new uptrend on silver miners, the ticker symbol SIL. For our members, we said the silver mining stocks look like they're forming a new uptrend. This was back on April 24th of 2020. Since that time, the silver miner ETF has risen 55%. We did the same thing with gold miners. GDX is the ticker symbol. We called that on April the 10th, a new uptrend alert. And since that time, gold miners have risen 47%. Every single weekend, our members are receiving these alerts. Now, of course, there has to be an uptrend for there to be an alert, but not every weekend we're going to have brand new alerts. But when we do, our members receive them. Wouldn't you like to receive those if you're not a member? Wouldn't that be something that would be beneficial to you if you're a swing trader or position trader? I would say it definitely is. And if you want to receive access to these uptrend alerts from us, all you have to do is go to followthemoney.com/join, choose your plan, and then begin receiving our weekend ETF trend alert service right there in your inbox each and every Sunday evening. If this sounds like something that would benefit you, just go to followthemoney.com/join, learn all about our services, and choose a plan, and begin receiving your ETF uptrend alerts each and every weekend from Follow the Money. All right, friends, welcome back to the program. Great to have you here on Follow the Money Radio. As always, you can find us online, followthemoney.com. My name is Jerry Robinson. I'm an economist, author of the book Bankruptcy of Our Nation, which I strongly encourage you to pick up if you've never read. And in this next segment, what I want to do is I just want to talk about a couple of things. First of all, we just wrapped up a brand new video teaching entitled Three Massive Asset Bubbles, and how to prepare for them. Right now we're living in a very, very tough economic environment, and you really need a financial advisor. If you don't have a financial advisor in your life, then you really don't have anyone who has taken an x-ray of what you have so that you can prepare for what's ahead. And I get it. Not every single financial advisor knows what's going on right now, but there are many, many good advisors out there who could help you right now. So I do want to encourage you, if you don't have a financial advisor, to reach out to one. If you have one that's close to the family, or you've been putting off that day of, where you have to get all your finances together and kind of go through it with your family and your wife and your spouse or your husband, don't delay that. This is now a great time to be repositioning your assets, taking a look at what you currently have. And right now, as I mentioned, we just released this new video, and it's available to all of our members, three massive asset bubbles and how to prepare for them. One of them obviously is the stock market. The stock market is a massive bubble. I mean, no matter how you really slice or dice it, we really have some extreme valuations going on. And there's other bubbles as well that many people are not prepared for. And each one of these bubbles one day is going to burst in fantastical fashion. And it's just a really difficult time right now. So I really want to strongly encourage you to have a financial advisor. And somebody might say, well, I don't have anybody in my life, or I don't know anybody who does financial planning. I need a recommendation. Well, that's something we can help with. If you want to use our free Christian advisor referral service, you can go to our website, followthemoney.com/advice. And there you can type in your name and information, and we will put you in touch with a trusted financial advisor that's in our network, that's in our referral network. And we have them, spread out around the country. So if we can be of service to you, if we can help you, then we want to. I am insurance licensed. I used to be a financial advisor. I kind of hung up all of my securities licenses many, many years ago and have focused really on education. But I still do insurance business, and I still like to see people getting insured, getting protected. But I mainly do all of that insurance business now through our Christian Advisor Referral Network. I want to encourage you to check that out, followthemoney.com/advice. If we can be of help to you in these trying times, we would love to be able to help you. We also got a question from a listener, and I wanted to address it. This actually came from a member by the name of Thomas, who lives down in Florida. And Thomas says, Jerry, I bought physical silver coins after your email uptrend alert on silver back in May. If you are not a member, you may not know, we had called a new uptrend on physical silver for all of our members back on May 15th. We sent out an email alert every single weekend. We have our weekend ETF trend alert service, and we just monitor, well over 100 different markets, 100 different ETFs. And when we detect a new major uptrend developing, we alert our members, and it's a weekend. We don't do it in the middle of the day, in the middle of the week. We do it on the weekend. So every weekend we send out a list of any new uptrends we're detecting. Now, sometimes we don't have any, but sometimes we have many. And on May 15th of this year, we detected a new major uptrend forming in silver. And so we alerted all of our members. And so he's referring to that. So Thomas says that he bought some physical silver coins after our email uptrend alert on silver back in May. And he says, I'm wanting to trade some silver stocks or ETFs and take more advantage of the existing uptrend because I think it's going to continue. He says, I think it's in its early stages. Do you think that this is a good idea, or am I going overboard? In your opinion, what are some good ways to trade silver right now? So great question from Thomas. And by the way, if you have a question, feel free to send those in to us. Just go to our website, followthemoney.com/contact, and shoot in your question for us. We'd be happy to address on a future podcast. But Thomas, no, I'm really glad to hear that you own physical silver. Physical silver in your hand is really what it's all about. Physical gold, physical silver, these tangible assets, these hard assets are really what is so different from the paper markets that we have today. Everything's paper, right? Everything's bonds and stocks and CDs and money markets. I mean, ultimately, all of these things are based upon paper. And so physical, tangible assets, we talk about PACE, P-A-C-E. That's how we remember it. We talk about it in our book. P stands for precious metals, A stands for agriculture, C stands for commodities, and E stands for energy, right? You remember PACE, you can remember inflation protection, you can remember hard assets. So, and I don't think it sounds like you're going overboard if you want to also participate in the uptrend through some, stocks or ETFs, to a reasonable amount. I mean, I don't know you. I'm not your financial advisor. I can't give anybody financial advice. I'm not a financial advisor, but I certainly don't know what you're trying to achieve, and I don't know how much money you're working with. But I personally agree with you that prices in the silver realm, and gold for that matter, are likely heading much higher before all of this is over with, right? We're going to see probably some volatility in the price. I don't expect silver and gold to just go straight up, certainly because the dollar itself has been falling, but when the dollar begins to fall like it's doing now, it tends to get a little erratic. So we can see some erratic price behavior in gold and silver as a result. And we're facing, the most fierce economic and financial headwinds since the Great Depression. And even then, not every single region was in a recession simultaneously. Think about 1929 when the United States went into a Great Depression. I mean, the whole world didn't immediately go into a recession, right? It took some time for it to all work out. However, with this modern problem that we have, this public health crisis and the government responses to it, has led to a automatic recession in virtually every region, according to the IMF, which is something that has just never been seen, where every single region goes into a recession. So I'm bullish on silver for the long term. I personally can see silver going to $50 to $75 in that kind of price range. It certainly could go higher. It may not even go that high, but that's kind of where I see, based upon my chart reading and my abilities, my experience, kind of tells me we're looking at somewhere between $50 and $75. So let's just talk about a few ways you can trade silver. Your question was, how can I trade? Well, the first thing that you can do, what you can consider, of course, is to buy long call options on physical silver, right? Or on a silver ETF. So long call options can be really powerful to take advantage of a longer term uptrend, especially if you don't want to put out a whole lot of money, up front. Maybe you don't have a lot, but you're wanting to speculate on future higher silver prices, then long call options would be an idea. Now, if you're not familiar with options, then that might not be an option for you. But if you want to learn more about options as a member, you can go to our website, and we have our options trading university there. So you can learn how we use these long call options to be able to profit from long uptrends. So that's one way. Another way would be to use the silver ETF SIVR, right? So you could buy a silver ETF like SIVR, which is the one we use, and kind of buy it on pullbacks, if you will. Maybe you could swing trade it, or maybe you could even position trade it if we get a nice pullback. So SIVR is one way, something you could consider. Also, the silver miner ETFs, SIL and SILJ. SILJ gives you exposure to the junior miners. J stands for junior. The SIL ETF is more of the large cap silver miners. And those two ETFs are already up big this year in response to the price of silver. But those ETFs can give you exposure, SIL and SILJ. It's a basket of silver miners. I actually prefer to trade in a basket of miners because it takes away that single stock risk. But then again, sometimes you find those stocks that you really like and you can use those. I'll mention two stocks that are actually listed among our top ranked silver mining stocks for all of our members. We have a smart score ranking system here at Follow the Money where we rank stocks based upon a really strict criteria, and that helps for people with their research. So the top ranked silver mining stock here at Follow the Money that has been that way pretty much all year has been Pan American Silver. That's PAAS. That has actually done very well this year. PAAS is up about 51% year to date. That's for 2020. That's not too bad, is it? And then let me mention another one. That's more of a larger player in the space. That's one of the larger silver mining stocks out there. But then you can also focus upon some of the small cap kind of silver miners. And there's a lot of speculation there. So these are, extremely risky on the risky side, although they can also be high reward. And one of the stocks that is listed on our smart score ranking, in fact, in the top 5, is a stock called Dolly Varden Silver. It's been on the list now this year for quite a long time. And it is up. It's a penny stock. It trades for like 64 cents as of right now. But it's up about 156% year to date. So, you can see kind of the difference between the large cap and the small caps. If you can pick a good small cap stock, you can often outperform those larger cap stocks. But at the same time, you take on a lot of risk, right? Of course, there's a lot of risk anytime you're trading or you're investing. So you always want to do your own research. But those are, 5 different ideas of ways that you could trade silver here, Thomas. You can do long call options on silver. You could use the silver ETF SIVR. You can also use SLV. Just use the silver ETF if you'd like. Or you could do a silver mining ETF like SIL or SILJ, which we use. And then also Pan American Silver and Dolly Varden. Ticker symbol on Dolly Varden is DOLLF. So those are just some ideas for you in your research. I hope that really helps you. In full disclosure, we personally own SILJ, which is the silver, junior miners ETF. And I kind of trade that one in environments like this. So I kind of am in and out. So when you're listening to this podcast, I may not actually still own it. I might. But I do trade that one occasionally, and I currently, as we do this broadcast, I currently own some of that, just in full disclosure. I don't own any of the others personally. So that's some interesting stuff there. So great question, Thomas. And I want to remind anybody out there who has a question, if we can address it on the podcast, we sure will try to. Just go to followthemoney.com/contact. Send us a question. We'd be happy to address that. friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, that brings us to the end of our program. Thank you so much for being a part of our broadcast each and every time we do these. It sure is an honor and a privilege to have you along. And as always, I like to leave you with a final word, this time taken from God's Word, the book of Proverbs, chapter 16, verse 16. What a wonderful verse where it says, "How much better to get wisdom than gold. To get understanding is to be chosen rather than silver." You know, gold and silver can protect our finances. They can protect us in this time of great economic turmoil, but they can do nothing to protect our souls. They can really do nothing to protect the spiritual lives of our families. That's where wisdom comes in. That's where insight and good judgment comes in. Are you pursuing wisdom as hard as you pursue gold? Are you pursuing insight and understanding as hard as you're pursuing silver, or if not more? That's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.